Jerry Robinson, welcome back to F.A.C.E. I'm looking
Great to
forward.
be here. Yeah, Dale,
Yeah,
thanks a bunch.
yeah, I'm looking forward to seeing what's top of mind for you in this climate that we're currently in, Jerry. You were right about, just testing my recall a little bit. You were right about a nice silver rally. I think that's the only thing I really kind of held from our last interview. Um, why don't you refresh my memory and our memory and tell us what you're seeing at Follow the Money
You
daily?
sure? Yeah, you bet. Well, great to be here again. Always look forward to talking to you guys. The markets are still in an uptrend.
You want to
We're
share
look.
your screen, Jer?
Yeah, let me go ahead. I've got a few charts that might be helpful here.
Okay.
Let me do that.
So the market's still in an uptrend. Uh, in a recent tests, still hasn't penetrated 4,200, but it sounds like you're looking for better numbers coming in the market and a continuation. No sell in May and go away in the market.
Let's see here if you're seeing my screen.
I'm seeing the Zoom. The Zoom
Let's see. I
box right now.
got the wrong one here. Hold on. Let me get that changed.
Jerry does a lot of great research. Stick around. You'll see some nice technical work here.
How about that? Do you see a
Okay, yeah.
S&P
Okay.
chart? Okay, good deal.
Yeah.
Yeah. Okay, so first of all, where we stand now, from our opinion, we've been following these markets, Dale, probably not as long as you, but I've been
Oh,
at
you
this
had longer, you have.
well, 25 years. 25 years. As whenever I started trading, I traded my
Oh,
first stock way back in the
okay.
day. So,
All right.
but anyway, over time we've seen a lot of different things. We have to admit what we saw in 2020 was radical. Well, it was crazy. Not so much from a disease. Diseases are that's kind of
Part of
what we have
life.
to deal. Yeah, that's part of
Yeah.
life. What's not necessarily part of life is seeing the type of intervention that we
Response.
saw. The
Yeah.
response, exactly. I mean, I'm not a political guy whatsoever. To be honest with you, I don't really have, even though I find it interesting and perhaps even exciting around election times, just to see what happens, just to see who people are going to choose, just like everybody else. I quite frankly see both parties as hypocrites, and that was on full display in 2020. I think the smart guys in the room will look back, Dale, and they'll realize the problems we had in the economy were much more self-imposed than people are willing to let on. And I think people
Well,
are beginning.
Larry Summers warned us.
Yeah, entirely self-imposed. I mean, underneath President Trump, for example, which may be a bad idea to even bring up his name, but just by looking at what happened under him, I mean, we never saw more fiscal spending ever in one moment, combined with monetary spending ever in one moment, in 1 year. It was almost like the government just froze up and had no idea what to do. And that's exactly what they did. So they went on a spending rampage, and it led to this 2021 incredible rally. And as we moved into the 2022, of course, the inflation caught up with us. It drove, asset prices down as inflation went up and the Fed began raising interest rates. We talked about it last time, by a factor of 5,000%. From nearly zero all the way up to where we are now, somewhere about 5%. We expect the Fed to raise interest rates by another quarter basis point next week. And then we expect a pause. That pause could go on for probably through the summer, in our opinion. And then by September, we would expect that as early as September, we would expect there could be the very first rate cut. Reason being is that the U.S. economy is not built for higher rates. It just simply isn't. This economy is built for cheap money. And so we don't suspect that the Fed, even though it talks tough and even though it's played tough here by raising interest rates, we don't think that it has the ability to maintain rates here, as evidenced by the banking sector, which has already been hammered because of their balance sheets, and a variety of other things as well. We saw, like, for example, with the latest GDP print that came in, showing a 1.1% growth rate. That's about where we expect the United States to be, unless they're going to drive interest rates back down to zero. And then maybe they can get it up to 2%. Okay. So the Fed is kind of a one-trick pony here. They either raise rates or they cut rates, and they've done their raising. Now they're going to have to turn around and begin cutting.
Okay, so you think that he's going to announce a pause next
No,
week?
well, no, maybe. I mean, what I really expect is for the Fed to come out with their 25 basis point rate hike and then start prepping for that pause. They may give the pause, and that could spark a big rally. See, that the equity bears here have had their moment. This is one of the things we've been talking to our members about here at followthemoney.com, is we've been encouraging them to be very cautious in being super bearish. A lot of the bearishness, Dale, and when I say these things, I want everybody listening to know that I don't have a political bone in my body, but I realize that politics often drives people's investing, and it also drives their trading. And I've seen so many people get burned because what they'll do is they will take politics, the current political regime, and they'll think, well, the market can never go up with this guy in office, right? That's what they'll tell themselves.
It's all about liquidity. So
right.
Yeah, so
exactly.
You see monetary conditions have been loosening with the injection from after SVB and the facilities that they've set up for banks. That I hear they're still going to the window and grabbing as much money as they can, the banks, and this program.
Yeah, as long as it's open, and we don't see it closing down, because the banking sector is still a problem. It's still got a problem here. So right now, we had expected the market to kind of move this way at the beginning of the year. We laid out our market commentary at the beginning of the year, Dale. We said, look, cryptocurrency is going to very likely going to lead the market, lead the recovery. We've certainly seen that. Bitcoin up nearly 70% or so, Ethereum up something very big as well. We also expected QQQ, the more tech-heavy stocks, to also lead the overall equity to outperform, and they've certainly done that. One area where we missed it, and I don't think we've missed it because I think the year will still bear this out, is we also expected small caps to participate, because typically whenever you kind of move from a bad to a less bad situation, those small caps will tend to rally. So
yeah, they're sitting right at their lows. They better hold here.
Yeah, exactly. In fact, I've got a chart here somewhere of, let me come down. I hope this doesn't spin your. Oh, there's QQQ. You can see there's a real nice bull market going on there. Let me just go gently
like
here. Yeah. Let me see. Let me do this continuous here. And I think, here's Russell 2000. Okay. Yeah. So the Russell 2000. We do expect that small caps will rally in 2023. And I think in this case, you got to be real careful if you're a stock picker. But just using something like the IWM, the Russell 2000, I guess Schwab has a new ETF as well that just came out this year, targeting small caps, SCHA. I'm interested in that one. I like SCHD for dividends. I think Schwab has some great funds for that purpose, low cost. But the Russell 2000 ETF, IWM, we think this one also could do well. We're expecting small caps to rally, predominantly due to the fact that people will slowly begin to realize we're going from bad to less bad. There's a whole bunch of bears right now. If you look at the AAII polls, or if you look at just the average, the average person on the street, most people, and this is normal, Dale, this. This is the way it works. So we just had 2022, and people didn't realize what was happening until about halfway through the year. Then like, oh my goodness, we're in a bear market. And then of course it came down, and then it bottomed, and then it started going back up again. And people don't believe their lying eyes, so they see now that it's going back up, but they say, well, no, it has to go back, because they're still stuck in bear mode, But as this market goes up, and we're at the tail end of rate hikes, now the rate cuts are going to come in. That's a tailwind for stocks. It's going to be a drag on the US dollar, which has really been driving that equity bear market. Now we're moving back into a time, Dale, where the markets are going back up and people don't believe it. And so we would imagine that over time, people will start piling back in. There's a lot of cash on the sidelines. And as they do, it's going to drive this market even higher as we go forward. There's a few things like let's consider the dollar. For example, the dollar had this huge run in 2021, 2022, of course, and it was constant. Every time it touched its 50-day moving average, it was a buy signal until it broke down as we started getting near the time where the Fed said, okay, we really are getting near a time where we're going, and the market started forecasting some sort of pause. Well, the dollar has already come down dramatically from, say, 115 on the index back in September down to 101, 100, somewhere in there. And we see that the dollar has a lot more further to go. We would expect the dollar over the next 12 to 18 months, to hit down here back where it was, say, back in 2018, even in 2021, where we're down to 90 or 88. That's going to be a huge tailwind for assets like gold and silver.
But what about if we get what you're depicting on the prior slide? We get a bear market rally in the dollar back to 108.
Well, we certainly could.
That equities, one of the reasons may be risk off.
Yeah,
for the dollar to rally like that.
Yeah, but the catalysts for a dollar rally are kind of unseen right now. They would have to be, in my opinion, they would just simply have to be black swans, which none of us can predict. I mean, we really have a lot of uncertainty right now. We have interest rate uncertainty, which we don't think there's too much uncertainty there. We think the Fed has made it clear that they have got to their they got to their terminal rate here probably this Tuesday. They're probably going to make that clear. That should clarify interest rate concerns. And people are then going to realize we may be stuck here for the summer, but the Fed really has no choice but to start cutting that rate. Otherwise, they're going to continue to roll.
Let's get back to the dollar, Jerry.
Yeah.
Okay. Your chart there. All right. It's a triangle. There's confluence at 107.5. Underneath, you say major resistance, 106, 108. Do you think, I don't think you'd put it up on the chart unless you thought that was a possibility for the dollar to rally back to those levels and be a great short up there.
It'd be a great short. Yes.
Yeah, but for it to get back up there, don't you think it's going to take its toll on risk and metals and everything? Don't you think really if you get the dollar right, Jerry, you get everything else right?
I think it's a great point. Yeah, I do. What I have a difficult time seeing is what could be the catalyst that would send the dollar up here, because I see the dollar more likely to come down than to come back and test this area, just based upon the catalyst.
I mean, I'm a bear too, but you have those bear mark, and you know what? Everyone's a bear.
Right.
Just like you make the argument about sentiment, contrary sentiment in the market is that everyone's bearish.
Yes.
Try and find a dollar bull out there.
Oh, right. Well, that's true.
Right. Can you find one? Besides Brent Johnson and his milkshake theory?
Yeah, you're right. I don't think there's too many. I mean, they would have to assume that we're going much higher on interest rates, and there's not a lot of folks who do. So. Yeah.
Okay.
So you got that. Yeah. So you got that interest. You got that interest rate uncertainty. You also have debt ceiling uncertainty. That's also driving a lot of this bearishness, and because people are saying we don't know. We don't know if if Washington is going to pay Social Security. We don't know if they're going to pay military salaries. We don't know if they're actually going to pay their bills. Okay, well, this is a non-starter because we know that Washington does something very well, and that is they borrow to pay everybody else, and they're never going to stop until they're forced to. They're not going to voluntarily stop borrowing to pay people. In other words, that's the narrative right now. The media is saying, will they voluntarily stop borrowing to pay people? Of course not. Of course, the United States is not going to stop borrowing to pay people. That's exactly how they do it. That's like their MO. So we have no fear about the debt ceiling. Of course, it's going to be theatrics and good for media ratings. That's really what they're ginning up here. But in reality, we're not concerned at all that the Republicans and Democrats are going to come to an agreement to keep borrowing money to spend money we don't have. We have no doubt. So the debt ceiling really is also kind of an uncertainty that we think is already pretty much resolved, even though the media, is not telling us.
I heard an interesting take on this, Jerry, that, everyone's going to be afraid during the theatrics, but the real problem comes when they do raise the debt ceiling, because that gives the Treasury room for issuance, and they're going to soak up all the liquidity that's going to other places right now.
Well, yeah, that's a good point. I mean, some of the after effects of it, of course, are not good. But as far as the actual debt ceiling itself, because we just move from crisis to crisis, we just lurch from this problem to that problem. And so even if the debt ceiling is solved, then it'll be, something else. It'll always be something else. The other uncertainty that people are worried about is the recession.
China.
This has been the most telegraphed recession of my life. I mean, we've been promised a recession for a long time, and it may come, and it's probably very likely will, because that's what happens. Recessions do come, but it's been so telegraphed that it's been baked into the market. So again, people who are concerned about a debt ceiling crash, well, we don't see that. People who are worried about a recession, well, we may get it, but it's already baked into the cake. People who are worried about interest rates, well, the interest rates are, they've kind of reached their top tier. So we're not too terribly concerned about that. That leaves the banking sector crisis. I think that's, out of all of the uncertainties, the banking sector uncertainty is probably the most valid.
Because
but even
it'll tighten credit conditions.
Right. Yeah, that is a real concern. However, the Fed has made it abundantly clear, and the Treasury has made it abundantly clear, that they're willing to do whatever it takes. And whenever they use that kind of language, they typically stave off, liquidity issues. And so those uncertainties we feel rather sublime about. We're not too terribly concerned about that. And what we've been doing with our own members is we've been saying, look, if you're committed to a long-term investment strategy, don't let these near-term, concerns stop you, because what we sadly saw, and what we were doing here at our own website and mentoring and coaching, is we were trying to help people through 2022 to not stop their investment strategy. We trade and we invest. We typically trade around our long-term investments, or we'll trade something else as well. But the point is that many people do it wrong. They buy once they're fully convinced that there's not a problem in the world, right? And then say, okay, well then I'll buy. Okay, well then when the problems come back and then the market goes down, well then they stop, and then they often sell. So like I say, in 2022, well, this was a wonderful time for people to not stop, whatever they had been doing the year before or the year before. This was a grand opportunity to be able to keep plowing, keep dollar cost averaging, keep doing whatever they normally did. But instead, what we saw is many people sell near the bottom, and now many of them are still scared, watching it go back up. What we're fearful of is the fact that those same people will then start piling back in once they feel like everything is okay again. Well, this is how I invested for the first 10 years of my life, and it was a disaster. So I learned pretty quickly. Thankfully, by the time the 2008 crash had come, I realized that you can't be you can't buy at the top and sell at the low forever. You've got to have a better plan than that. And that's one of the things we try to help people with, is to stick to their plan. But when it comes to specific markets, you mentioned silver. Silver's on the verge of doing something pretty big. It really is dependent. It really is dependent upon the dollar and also global growth,
or how thick your red pen is. Your red
right, right. That's right. That's right. It all depends. But we can see silver doing well. We're not in the camp, though, that thinks that silver goes to some absurd price. I would say that the more likely case is if you're looking for that kind of market, you would want to be looking at Bitcoin. Yeah, Bitcoin, we've been bullish on since 2011. We were so lucky to get in early. We had a friend named Trace Mayer who has kind of evaporated from the ecosphere lately, but he was a wonderful. He tipped me off very early. Bitcoin is just a market that I don't think people want to ignore if they're trading for sure. But we got a wonderful 50-day bounce just the other day. It pulled back and there was a lot of fear in the markets, but we got a nice high volume 50-day bounce. We see Bitcoin going to much higher prices this year and
Go
later.
ahead. You could say the number. Don't be afraid.
Okay, I won't be. Okay, good. Thank you.
Go ahead, man.
2025, we have a forecast of $275,000 on Bitcoin. Now, that's actually when I issued that back in 2020, I think I felt like an idiot because nobody was talking. And then, of course, Kathy Wood's like, it's going to be 1 million, and then other people started coming out, and so I feel much better now. I feel less sheepish. But 2025. We see a price of $275,000, being reached at some point.
10 bagger.
It's a 10. Yeah. It really is. And that, of course, and I had somebody ask me the other day, valid question. He said, well, if you think, it's going up that much, it's like, why aren't you selling the farm and putting everything in it? And I explained to them, that's how you end up in a world of hurt. We allocate a nickel out of every dollar that we have to invest into crypto. And it's been that way since 2011. I mean, that's what we do, just a nickel.
Yeah.
That nickel is enough, and so it keeps, but some people get way too heavy into certain assets and they really put a lot of risk upon themselves.
Well, it's baseball season, right? Well, if you swing for the fences, and even the greatest home run hitters many of them were strikeout kings at the same time.
That's right.
The difference is you can only strike out once if you're swinging for the fences.
That's right. Yeah.
They get to come up and they maybe have 3 more at bats during the game.
That's right.
Anyway, yeah.
Don't try and
grind it out.
Exactly.
Kill yourself making money in the market. That's the way to do it. Grind it out.
Well, if you're looking at, say, like we use something called the extreme value zone, which represents a 60 to 80% discount range from the previous peak. And so typically, if we get it down into this range, then what we'll do is, like, we dollar cost into Bitcoin once a week. But what we'll do is we'll double up our dollar cost average. Whatever we're doing, we'll double it up when it's in this zone. So we had an opportunity from June all the way until April to do that, to double up our dollar cost. But now we're back into a place where we're back above that zone. There's really nothing magical about that zone, but it just kind of sets a rule for us. It creates a rule where you got a 60 to 80% discount on a high quality asset. Well, that's a great time to maybe double up on your dollar cost if that's what you're doing, if that's your strategy. We're back out of that now, and that's a sign I think we're moving higher. There's also another key ratio for those watching, the Bitcoin and S&P index ratio. When that number goes above 7, that's a big deal historically. We've noticed just from analyzing it, and so we're
a lot
right
of
there
things
at 7.
Outperforming the market. The gold Dow ratio has turned too, right? I know people watching that.
Yes,
happening.
Yes. Yeah. There's a lot happening, but again, we're not of the opinion that that the whole market now is going to go down. Let me go back up here to a S&P chart. It's a little bit higher here. Yeah, we're not of the opinion that the whole market is going to go down later this year. I have heard some different theories of, say, like a melt up theory followed by a big crash. We're of the opinion that the crash mentality is kind of tied up in the 2022 sell-off, that there is a lot of emotion and psychology that tends to surround bear markets, that tends to linger. That's what we see. But we see that many people are still married to the idea of everything is going to crash because it just did.
Well, Jerry, something I discovered, I really haven't shared it out there, but I used to Google stock market crash 2020, stock market crash 2021, and there are always multiple predictions about a stock market crash. Go and Google stock market crash 2023, and maybe you find Grantham's call. And I'm telling you, there is not a lot out there about a potential crash in 2023. And previous years, you'd have at least 10, 15 bears out there with their
Yes.
reasons for a crash.
Yes.
Google it, stock market crash 2023, and you're not going to see a lot.
Huh.
Does that mean anything to you? I mean,
I don't
could it
know.
mean something?
Perhaps. I mean, for me, I try to stay off social media, but whenever I get
All
on
right.
social
Well,
media, I see a lot. I see a
it's
lot
not
of that
even,
kind.
yeah, this was not even, it's not social media. It's just, who
Mm-hmm.
is writing for Fortune magazine or
Right.
Barron's, those articles, and talking about people need to get prepared for the flood,
Right.
and build their ark. It's not out there.
Interesting.
Anyway, I thought I'd share that tidbit going into the end of it. Your work is clean, um, and I like your regimen about how you teach people to be disciplined when they have a buy program and levels. You're a reasonable guy in a wild industry, and reason and prudence is they're great qualities to have, Jerry, and you have them.
Thank you, Dale. That means a lot from you. That does. And I just saw a question here real quickly. It says, "Can I
Go ahead.
ask what can I ask what vehicle you are using long term on
Oh yeah,
Bitcoin?" I saw
yeah,
that from Rick.
yeah.
Just real quickly, I buy Bitcoin outright. So I just buy physical Bitcoin, even though there are a few ETFs out there. They're not great, in my opinion. I just use regular old Bitcoin. I buy it through Kraken or Coinbase or any exchange, and I hold it in a hardware wallet. So I don't keep it on the exchange. I always buy the Bitcoin and then keep it in my own possession on a hardware wallet. Great question.
And it's not that easy to, if you're a novice, to do that, is it?
Uh, it's much easier than it used to be, but you're right. It is a little tough, and we have a whole course, and we explain to people exactly how to do that. We've got a lot of great material and courses for people who are interested in doing that.
All right. Well, I may
Followthemoney.com.
have to sign up for one.
Yeah. Well, I'll give you a, hey, we've been on here so many times. How about we extend you a complimentary, subscription, because I know you would definitely use it and share it with your audience. So,
Okay. I'll take you up on it because, my team here dragged me kicking and screaming into the 21st century, or is this the 22nd? Anyway, I was known as not low tech but no tech.
all right.
Now I can get
Now you're
around,
low
but
tech.
I don't have the attention span to do all those things that you need to do to buy it and transfer it to a wallet. Anyway,
Well,
just a sign
if
of
I
my
did,
mental state.
it's if I didn't have a wife who was analytical, I would probably be in the same. But I don't even have a cell phone, Dale. They are completely distracting me. But my
Yeah,
wife is kind of macro or micro. I'm macro, and together we make a great
yeah,
team. So I totally understand your
yeah,
complaint.
yeah. We're macro. So, Jerry, best way for people to follow you at
Yeah,
Twitter. Your handle's at FTM Daily. How about showing us your website and where they could go?
yeah, great. Thank you for that. So you just go to followthemoney.com. You load it up here. You just go to followthemoney.com. You'll come right in, and you can enter your name and email address right there if you want to join our free email list. But then there's a ton of materials up here in the top header where you can download reports. You can get our podcasts that we do. We do a stock trading podcast. We do an economics podcast, a precious metals podcast. And we got tons of member resources. So we put out, I'll show you one last thing if I have 30 more seconds.
Go.
Our ETF leaderboard is one of our favorite services for our members only. And for the last 8 weeks, we've had sugar at the top. And I don't know if anybody's been paying attention to sugar. Sugar has just been on a
Yeah.
tear. It's been the number
Yes.
one ETF, the Frank, and then France. And so we rank 150 ETFs by trend. And so many traders love this. And you can see Kane, there's the chart. It's just been taken off. We put it at number one about 8 weeks ago, and it's just stayed there. But people can come in and they can, if they like to trade ETFs, boy, this is a great service. But this is one of about 50 different pages and services that we have access to for our members. So they can learn all about that by either going to our shop link or just by clicking on the plans and pricing, and they can become a member. And we'd love to have them. We'd love to coach them. We'd love to mentor them. And we'd love for them to start a 7-day free trial and kick the tires and test drive.
Cool, Jerry. Where are you geographically?
I'm in Fayetteville, Arkansas.
Okay.
Lovely little mountain town down here.
Sounds nice. So you could ride out any storm there?
Yeah, pretty much. You know, we're about 50 miles from Walmart, or 25 miles from Walmart headquarters. So there's you wouldn't think of it, but there's really a tremendous amount of corporate environment here, a really great job market. And yeah, and then we moved out, kind of get off the grid. We're out, you know, on 5 acres with woods, and we're kind of away from the city, but it's a lovely mountain area and good people, great place to raise a family. We homeschool our kids. You know, it's a wonderful place to be.
Jerry Robinson, you got it all. Thank you, my trading warrior brother.
Thank you, brother. Good to be here again. Look forward to next time.
Check Jerry out, and Jerry, I'll be in touch with you, keep you in the rotation. All right, bro?
Thank you, sir.
All right. So Jerry Robinson, everyone, follow him on Twitter at FTM Daily, and check out his work. You saw just a glimpse of it today. And you could join the team in 10 minutes on the Morning Edge. That's a wrap for me, everyone. Hope we added value to what you're trying to accomplish. It's not easy being a trader, but just like you have to be patient with the market, be patient with yourself. And above all, don't just count your pips, count your blessings. Have a great weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.